Hi, good afternoon, everyone. Welcome back to the channel. We're joined again with Sylvia Jablonski of Defiance ETFs. Sylvia, thanks so much for coming back on.
Thank you for having me on again.
Yeah, so rumor has it there's some big news with Defiance involving weekly dividends.
I'm not sure what you're talking about. No, just kidding.
Yeah.
Yes, by popular demand, a lot of, kind of like your listeners and investors have reached out to us and asked us to increase the frequency of the dividend payment, and so we've listened and we've made that change, and so starting in a couple weeks, like in the second week of October, so
Okay.
the enhanced income funds, which is QQQY, WDTE, IWMY, will go to weekly.
Okay.
Yeah, and so so that'll be good. Investors really wanted that, asked us for it, so we just made the switch.
So for those three.
Yeah, for those three. Yeah, we might.
Okay.
Yeah, we're up for discussion on the other ones too. So always love to
Right.
hear everyone's feedback on that.
Yeah. Yeah, no, that's good. It's good that you all are listening to the investor feedback. There's been overwhelming demand for it.
Yes, it's
Hmm.
and this is like literally investor. This is literally investor feedback, and what I've learned from you guys, and we've even debated. We kind of reached out to a lot of people that engaged us after some of our conversations and have asked them like, which day do you like?
Yeah.
Yeah, so we're gonna figure it out and go weekly.
A couple people said Thursday, but someone said here, please pay on a different day than Yield Max.
Yeah, well, I think they staggered it, right? If
Yeah.
I remember correctly. Yeah, it's. I mean, now there are a lot of divs getting paid. Hopefully, we have the juiciest one. We kind of did a survey on something, and we got back that like Friday was the preferred day. I guess people associate Friday with payday, and so
Exactly.
that sounded good to us. So we'll be announcing after the close on Wednesdays usually, and then paying on Fridays. So
Hmm. Great. Okay, well, let's take some questions then. So Steve
yeah.
Tran says, using your QQQY and QQT example, which some have better balance between income and equity growth?
Mhm. Well, so I think so. Is the question like between yeah, okay, which one to use, right? So
Yeah.
so on the target funds, we're shooting to return, aiming to return 20% per year, right? And so
Hmm.
just on a basic level, the NAV decay would be less, right? Because like on QQY, the last dividend was over 100%. We've had
Hmm.
IWMY over 100%. And so when that gets paid out of the NAV tends to, shrink quicker than the target funds do. So the target funds are for investors who kind of want that steady dividend that they want to, kind of take out and live off of, and maintain market exposure, market performance, less decay. On the IWMY, QQQI, and WDTE, you're getting these massive dividends, right? And what we've found, I always love to hear feedback on this too, right? Because people have suggested like, well, why don't you marry them, or why don't you make it something like 50% target instead of 20, and forget the 100? And then other people are like, absolutely not, leave it alone. I like the high yield and I reinvest it elsewhere, or I drip back into your fund, whatever it is. So we just, I think overwhelmingly started to hear that, there are two audiences for this. The people kind of
Hmm.
like the one set the way it is, and others like the target set the way it is. So
Certainly, certainly. And I hear a lot of people say we're okay with a lower dividend as long as we have NAV preservation.
yeah, and then it's so interesting because we had a bunch of investors in the room the other day, and we also heard the total opposite. Like, just focus
Yeah.
on the dividend. I don't care about the NAV. I
Yeah.
understand total return, and I want these divs, right?
Hmm.
So, yeah, I mean, we're definitely like always open to the feedback on this. So keep it coming.
Yeah, certainly. Okay, so this same person has a lot of questions. Let's see. Will you be changing
Okay.
your option strategy on QQQY? NAV going down too fast. Distribution is great. Can you, yeah, same theme. Income and equity growth.
Right. Yeah. So I don't know if you saw, but we actually updated the prospectus in order to be able to use kind of like both one DTE and zero DTE options, as well as
Yeah.
different options products to try to capture a certain amount of target per day, which is like 0.15 bips is what up, at least 0.15 bips is what we said. And so, we've also heard the resounding feedback about the nav, and so that's something we're going to look at and kind of work on. But it's a tricky thing. I mean, we could easily seek less income or even pay less income out and keep the nav steadier, but we always, when we first launched this fund, the thesis that we had is we're going to pay out every penny we make, and that's how the fund's going to run, and people will understand its total return. But yeah, I mean, we're gonna use the different strategies in mind, and we kind of like have it in mind that investors are dissatisfied with the NAV issue. So.
Mm-hmm. And then I think you already answered this, but you said the weeklies are going to start. Was it October 2nd or the second week in October?
The second week, yeah.
That's right. Okay.
Yeah, I can pull the date for you. I think it's we would announce on the 9th and pay on the 11th.
Okay. Great. So question from Discord. Would you consider expanding the JEPI, WDTE, and IWMY strategies to provide downside hedging using inverse ETF equivalents?
So we would have that would be like a completely different strategy than the one we have filed for. I have heard traders doing that on their own, hedging it with an inverse ETF or using some kind of put or something like this. But it's not in the prospectus, and it's not kind of possible in terms of like what we say our target and goal of the fund is.
Mm-hmm. Yeah, you would have to completely change the strategy.
Yeah, it would be like a different product, basically.
Mm-hmm. Okay, let's see here.
And for what it's worth, like, we've learned over the years that people like the transparency and don't love it when you kind of change things up too much without, making it super transparent. And so, like, stuff like that, it would look like this, where we're announcing something way ahead of time, and, you kind of know what we're doing.
True. Yeah, I did hear about your prospectus change.
Yeah.
Okay, let's see. How would the NAV behave differently with the weekly versus the monthly approach? Could the weekly help hold up the NAV a little better?
It should be more or less, the NAV issue wouldn't go away, right? Because we're kind of getting the income that we're getting. We kind of understand what it is, and so we can estimate what it would be on a weekly basis, basically. And if you add up the 4 weeks, you're kind of going to get the month, more or less. So it would be the same. But again, we're more sensitive now to the feedback around the NAV, and we're going to be looking at that potentially a different way.
Okay. Yeah. Okay, let's see. This person says, does the strategy remain the same? I'm not sure what they're referring to.
Yeah, the strategy remains the same. We're still going to be selling those slightly in a money puts, and on a daily basis, daily basis or less than daily basis, like pure zero data expiry types of options, and just trying to gather that decay and that juicy premium, and then distributing it out.
Mm-hmm. Someone says they want IWMY Monday, QQQY Tuesday, WDT Wednesday.
Yeah, we debated that one too.
Really?
That one too. Yeah, and I mean, if it turns out that that's what everyone's telling us, we could do stuff like that. I don't know. Yeah, I don't know. Maybe people like getting paid every day, I guess, is the the synopsis, right?
Yep. Let's see. QQQT has low assets under management because 100% margin requirement at Schwab and other brokers.
Yeah, QQQT is new. We're not too worried about that. I think it's new, and people are kind of finding their way to it.
Mm-hmm. This person says not Friday, but I thought Friday was like a good payday. So.
Yeah.
Oh, they say, please pay on Thursday. It would show up in E-Trade on Friday. That's funny.
Yeah.
Okay, we've got Surf and Wine on, looking at total return. Why would the NAV of QQQY and WDTE be more than other similar funds? What are you doing to correct this, if anything?
I mean, if you look at the distributions that we pay as compared to other funds, it's they're notably higher. So it's a tough thing, right? Like I think like different funds do better at different times. And so, hey, we are going to correct it, right? We're going to try to capture more upside and work within the realm of the strategy to preserve the NAV. And that's pretty much starting, today on the same day that we changed all this stuff. But, you have to think about the funds differently too, right? So our product as it stands has a lower standard deviation than the underlying index. And we always meant for it to be an alternative income fund and not necessarily a competitor of like, NASDAQ or even like we get compared to Roundhill all the time, right? Like they're looking to provide, well, they're kind of more on the growth side, right? And we're more on the dividend side. And so they're different products. Like ours will do better in a pullback, right? Because you're going to get more income and it's going to buffer the downside. And then on the upside, if you have a day where the market rips, they could do better. And we've kind of had that in the last, regime. But we're somewhere in the middle now in terms of just understanding that investors want us to do more in terms of NAV preservation. And so we're gonna work on that too and just try to strike a better balance with growth and dividend.
Mm-hmm. Let's see, this person's SPYI, QQI, 30%. Defiance, SPYT, QQT, 100%. This is the same question. This person says, don't change SPYT, please. It is perfect.
Oh, thank you. Yeah, we don't hear much about that one, actually. We don't hear any. We
Yeah,
just
that's
feedback
less.
on it either way. Good
there's
or bad.
less buzz around it. It's more stable, but less buzz.
Yeah.
As far as the target funds, would love to see something around 30% and then calls being made to increase the NAV.
And calls, yeah. I think so. The problem is when we back tested this, right? Like 20% is kind of the sweet spot where you capture the most. You can pay out a big dividend and capture the majority of the upside. Once you get to 30, you start seeing quicker NAV decay. And so I think, what we say to the people who want more than 20 is go to the other one, go to QQQY.
Mm-hmm.
And I get it, point taken. There could be something in the middle for sure, like a 30, 40, 50. But I think like the best balance of growth and target income is around 20. And, hyperbolic div payments are for QQQY for sure.
Mm-hmm. Okay. With weekly dividends, all the rage now, should we soon be expecting daily and even hourly dividends?
I think it's a completely valid question to ask. It's hourly. No way. I mean, I don't know what operations team can manage that, but
right.
Best of luck to them if they can. Yeah, I think if everyone starts pushing for more, they'll probably come more frequently.
Yeah. Like you think daily would be a possibility?
I just don't know what you achieve from that. I mean,
right.
You know what I mean? Like monthly versus weekly, I can understand, right? Because you're kind of getting like a good chunk of change 4 times a month on a juicy dividend. But when you start doing it daily, like the amount is going to be so, so low. I don't know. It could be done. I just don't know that it really gets you anywhere.
Right. What are your thoughts on, so there's like a split in the retail community. Some people say that weekly is better for compounding. Some say it's worse. What are your thoughts on that?
I think we have to look at it and see what actually happens. Like when you back test it, it's around the same. So, but it kind of depends, right? Because like the last couple of weeks have been a little bit off because you had a couple of like rips and rallies. So it looks a little bit better than it would have if it was monthly. But, I think if you have more volatility, you'd have more decay. So it just like monthly would probably be more stable. But they're pretty, like right now they're pretty close. So we'll have to watch and see. I don't want to give you like a bad answer, but because we haven't had it like long enough to really, really track it. But
I know with the options though, like weekly, the structure's different with the weekly options with
but we're still going to use the same exact options. So that's why it's not so different. You know what I mean? That's what I'm saying. It's hard to answer because it's still just like the 0 DTE. So
right.
We're not going to change to weeklies or anything like that. We're not going to use flex options. at least not on a regular basis. That's more of a if something isn't available type of, hedge. But
This person says QQQI distribution schedule looks good. It's on Friday.
yes, you'll know on, you'll know Monday morning what the next div is going to be.
Yep. Thursday pay, WDTE. Did you say sell in the money?
Yeah, it's like the 30 Delta puts.
Uh-huh. Okay, this person said, thanks for the answer.
You're welcome.
Would love a target fund at 30 to 35% stable like SPYT.
Why don't you marry QQQI and QQQT and make a target / enhanced income baby?
Yeah.
That's a way to do it, right? That's definitely a way to do it. Or you could even, I mean, you could definitely do that. Or you could take QQQY and stick it with Qs.
True. What are your thoughts on like buying the index versus buying these funds? Because I know Jay has said he thought 50-50 was a good idea.
Yeah, 50-50 is a good idea because then you're getting, a good amount of the upside, but you kind of like reduce your standard deviation. You get a little bit less risk by throwing in the div payment. That cash kind of buffers the down days. So I've definitely heard that before. And I mean, at this point, I've heard everything. I've heard of like the div wheel, just kind of going from
wheel strategy.
Wheel strategy. Yeah. And then I've heard, like the advisors do that, right? They'll take QQQY and stick it with Qs or, like one of the tech funds, and same thing with S&P 500. I've even heard somebody doing like equal weight, like an RSP with WDTE, because then you get like some of the S&P 500 exposure, but you reduce your risk by equal weighting it and then getting the higher dividend. Like I've heard it all.
Yep. Let's see. Charles says, will the target funds, SPYT and QQQT, move to a weekly distribution or stay monthly?
You guys tell me, what should we do?
We'll take a poll.
Take a poll. Yeah. What should we do?
Yeah. And then also when will
and USOY too. We have USOY out there too. So
yeah, that's true.
If you want that weekly, let me know. Well, yeah, we're definitely talking about it.
And then when will IWMT be coming out?
So IWMT, I mean, to the point that you made, QQQT, or one of the questions that came up before, QQQT hasn't taken off yet. So we want to see if the market really wants this, if you guys really want these, if you really want another one. I mean, we have a whole, load of both targets and enhanced income ETFs on the docket, but I think we're just kind of waiting to see what the market says about it. Because I feel like SPYT is doing arguably pretty well. QQQT, kind of hasn't taken off yet. And so is that because it's more volatile? And then so IWMY is worse, or is it just that, people want a higher dividend for now? Like we're trying to sort that out, why it's not, if it's just too new, or we're going to see where that goes. If it goes well, we'll launch IWMT.
Yeah. Okay. Makes sense. Let's see. Rob Smith says, I have QQQY and IWMY. The dividends are awesome, but the NAV erosion is the worst of my funds. Is there a way of making a fund like FEPB with little NAV erosion, but the same payout as QQQY and IWMY?
Let's see if we can work. Well, let's see what we do to work our magic. But yeah, I mean, you kind of have to do different things if you don't want to erode the NAV. Again, like I think when this product was first conceptualized, we thought this would be very much like an alternative income type of product. We're just going to pay out all of the income that we make, and investors can choose. Investors will understand that the NAV will decay, but they can choose to either, reinvest, and then they kind of smooth out their own NAV, or reinvest somewhere else. And I think now we're taking the feedback that investors would be perhaps happier somewhere in the middle with a very high payment, but a little less NAV decay. And so, we're working on that on our side.
That's definitely the consensus I hear too.
Yeah.
Yep. Okay. Any chance we can get something like YMAX, IWMY, WDTE, and QQQY together in one fund?
We're talking about it. We're looking at it. But
yeah,
I think again, like we need to see that investors still have really high conviction in our funds and interest, and that they're, that they grow, because they've kind of been pretty steady Eddie and stable with assets and stuff. But we'd like to see some growth, I think, before we just want to have high conviction that people would really want to trade our products in a managed fund of funds.
Yeah, true. Are you able to do call spreads?
Not in the target funds. Yes, the prospectus allows it. Not in these funds.
Mm-hmm.
We could. It would take a prospectus update though.
Okay. He says weekly help with cash flow.
Yeah, coming soon.
Mm-hmm. He says Sylvia, the ETF Contessa.
Thank you very much.
Here's a good question. Where do you see these funds in 5 to 10 years?
I see these. I mean, I see these funds hopefully growing and hopefully building out the suite of the funds, both for the target and for the enhanced income products. So we hope to see both. We have very high conviction in these products. So
yeah, that's good.
Yeah.
This person says target funds should stay monthly.
Okay.
And then a differing opinion,
all
weekly. Yep. It's because I can't buy QQT on margin at Schwab.
Yeah.
Let's see. Is it true no matter what the NAV is, we will get distribution solely off the premium we make? Okay.
Yep. True.
Okay.
We're paying out the NAV. I mean, we're paying out the premium.
I was like, whoa.
Yeah, no, we're paying out the entire premium.
Yeah. Let's see. Thanks for answering my question. Marrying the two never crossed my mind. Yeah. Yep. Let's see. I'm an amateur, so the NAV erosion has scared me away from Defiance till now. This has been informative.
Yeah, and just real quick, because a lot of people don't know this, but if you look at, I get a lot of phone calls, right, that are something along the lines of, I hold QQQY and I'm down, 30%, and I'm looking at it, I'm like, well, to my knowledge, we're up 15% for that time period. So total return, you have to look at total return, right, not price return. You have to factor in the dividend that you received and kind of like put it back into the price. And we have that on our website. So a lot of people don't know that, and they're trying to, figure it out on Yahoo Finance or whatever, but it's actually on our website. So you can see, if you click on the ETFs, like kind of somewhere in the middle of the page, you can see what the total return is of the funds.
Yeah, I'll pull that up now.
Yeah. It's as of like, the month. I mean, we can change it and make it more frequent, but it's there just so, just so everybody knows, you can actually look it up.
Mm-hmm. Let's see. Yeah, you have distribution rate here.
Yeah, so that's the distribution. And if you kind of like scroll down a little more, performance, like right under their performance there.
Oh, yeah.
Yeah, so you can see your total return there. So, that's because a lot of times, so since inception, 15%, somebody called me the other day and said, I'm down 30% since I bought this thing when it came out. But,
yeah.
And again, keep in mind, alternative income fund, right? Like if we were trying to beat NASDAQ, I mean, we'd probably be, doing something else and not really focused on income as much.
Right. Well, that is good to know. So the audience can look there.
Yeah.
All right. Perfect. Okay, let's see. Redfish says if target funds have 25 to 30% return, I would buy some. At 20%, I'd be interested. I wouldn't be interested. 3 years ago, I would have bought hundreds of thousands of dollars of SPYT and QQQT.
Okay, interesting. Good to know. Good to know. Yeah, again, like target, it could go to 25 and 30, but there would be, that extra bit of NAV decay too. So.
Okay. Let's see. I would love a Defiance fund like Ulti.
Yeah, we'll definitely on the whiteboard. So
cool.
I think if we see the funds pick up again, it's something we'll look at. And I know you guys know Jay. And
oh yeah, we've had him on a lot. He's a regular.
Yeah. So he and I are always talking about that. Like, should we do it? And
one of my favorite questions for him is why Ulti no go up.
Yeah.
Yeah. Okay, let's see. Oh, this is a good question. What's your opinion on people buying these funds on margin?
Yeah, I mean, I think if you know what you're doing, I don't, I think it's.
Well, that's the problem.
That's the problem. Yeah, no,
yeah.
But if you do, I mean, people who buy it, I definitely have talked to some very sophisticated day traders that are buying it on margin and they have the whole thing figured out.
Yeah.
But just, proceed with caution.
Let's see. I appreciate Sylvia seeing the NAV as a concern for Defiance offerings with the investor. We'll keep looking out for adjustments to help the NAV.
Yeah, thank you.
And then
Oh no.
QQY no go up.
Trad, no. QQY. Well, QQY went up 15%.
Right, and total return. Just look at the site, right?
Yeah, and the div went way up, way up,
Uh-huh.
way up.
Yeah.
Yeah,
Okay.
changing the funds might be a turnoff for people. Yeah, exactly. I mean, that's the the fine line we cross, right? Like we want to keep it within the strategy that we promised we were going to deliver. And so if you start making big changes, I think people kind of lose confidence in what you're doing. So I think we have a mousetrap that works. Like we could tweak it a little bit. There's different strikes and things that we can look at, but it's and we will, right? We understand the NAV argument, but we're unlikely to put in like massive hedges or start doing, credit call spreads or things like this. It's not what we promised. So, and that could change, but for now, it's not like doing and all that. So,
Yep. Okay, well, we're going to hop over to the podcast now. We'll
okay.
end it here for now. So thank you for doing this one.
Of course.
And to the audience, thank you all. And like, comment, and subscribe, and join Discord, and check out the Defiance site with Total Return. We'll see you all on the Brewing Great Returns podcast.
Thank
I'll
you.
send that link now. Okay, bye, everyone.